everyone. It's late in the day, and you saw insurance as the part of the heading, so thank you all for staying. I know when you see insurance, it kind of makes you run, perfect timing to go to the bathroom. But I'm glad you stayed. So I'm really passionate about insurance, and I think you'll be able to see why after I finish talking today. But we are really, really excited to be here to talk to you about why insurance is critical in the advancement of blockchain technology and digital assets. So my name is Sarah Downey. I'm with Marsh. I will explain who Marsh is in a little while. But for now, my plan today is just to cover three things. First, to explain who Marsh is and why we're here. Second, to explain why insurance matters to the advancement of this somewhat new technology and asset class, and actually why you all need insurance. And third, and equally as important, I want to explain why insurance needs all of you. Before I get started, I actually want to address two misperceptions that I've heard over the last few days, and my colleagues are probably sick of hearing me talk about them. So the first, which is the easiest one, is yes, there is insurance products that cover companies working with blockchain technology and digital assets. So that's the easy one. The second one is, contrary to what some people think, insurance does pay claims. And I thought the best way to do that was to try to personalize it for everyone. So I'm going to tell a short story. When I started college, I was a math major. I loved math. I loved numbers. I loved that there was an answer. Everything was black and white. Probably about the end of my freshman year, I decided math wasn't really what I wanted to do. I didn't know what to do, so I switched to psychology as a major. And I would just tell people psychology was so broad, it would apply to anything I decided to do in my future. So come junior year, my parents sat me down and had the inevitable discussion about how I really needed some direction in my life because I wasn't going to be on their payroll forever. And fortunately for me, that conversation coincided with my first constitutional law class. And I had the best teacher, Lee Epstein, in college. So in my con law class, we would have to read a new case or two before every class, and we would have to be prepared to argue both sides of the case. We wouldn't know what side we would be on until we showed up for class the next day. So sometimes plaintiffs would be in the front, sometimes they'd be in the back, sometimes on the left, or sometimes on the right. And what I learned through the whole constitutional law class that semester was that instead of liking things being black and white and always having an answer, I liked being able to figure out how to argue both sides. And also what I learned was that if you are prepared to argue both sides to something, when you actually do have to pick one side to advocate for, your argument is that much stronger because you could predict what the other person on the other side is going to say. So I ended up going to law school, and after law school, I totally randomly fell into insurance. And I was in private law practice, representing insurance carriers. They were all financial lines insurance carriers, which is exactly what I'm here to talk about. So we're not talking about health insurance. There's very little emotion involved. We're not talking about hurting a person because we're not providing coverage. But I fell into this, and we would represent insurance companies, and they wouldn't hire us to help them figure out how to deny coverage for a claim. But they would help us to try to figure out exactly what their contractual obligations were. So the way I look at it, an insurance policy is a contract. And sometimes insurance carriers pay claims because it's black and white. Sometimes they don't if it's black and white. And then there's this huge gray area. And being able to argue, whether you represent an insurance carrier or not, being able to argue why your argument should win is always really a great thing to have to do. So 5 years ago, I left private practice and I joined Marsh, which is an insurance broker. And I now get to advocate for companies like you. So I'm on the opposite side from insurance carriers. And I have seen nothing different than what I expected. The carriers aren't out to deny coverage every time. They're really trying to figure out how to apply the terms of their contract. So I tried to figure out how to make this seem more personal to all of you. So let's say you're a custodian, and we have some type of contract agreement, something in place. I give you my digital assets. A year later, the value goes down. That's fine. I can blame it on the market. That's not your fault. But when I go to withdraw my money, I'm really angry because there's no interest involved. I just get back the value of my coins or currency at the moment. And I ask you for interest. And you show me the terms of our agreement that say, I paid only for you to hold my assets, not for you to put it in some type of interest-bearing account. So just like your business, you don't want to pay for more than you have to pay. Insurers don't want to pay for more than what they have to pay for. So it's kind of the same thing. So that's a long way of saying insurers do pay claims. And in fact, over the last 5 years since I've been at Marsh, I tried to figure out how much I knew that insurance carriers had actually paid for clients that I work closely with. And I tried to figure it out quickly, and my numbers are very, very rough. The number is definitely higher because I really only added in like the bigger payments and things like that. But I calculated that for the clients that I've worked with for the last 5 years, we've collected over $700 million in insurance proceeds for those clients. And I'm pretty sure if I counted all the small payments, the clients that I've forgotten about, I'm pretty sure that number will be way closer to $1 billion. And I'm one person out of about 300 people in my division. And so think about the $750 million payment times 300. So the reason I wanted to share those stories with you is because if I can't convince you that insurance pays, or to at least keep an open mind, then the rest of this discussion is going to be meaningless, and I didn't want that to happen. So hopefully at least you can keep an open mind about insurance. So who we are. We're a leading insurance broker. We don't provide insurance coverage. We help clients find the right insurance partners to work with. The insurance carriers then provide coverage to our clients. Insurance is a form of risk transfer. Companies in all spaces are exposed to various forms of liability based on the services they provide. Insurance helps transfer that risk away from the company's balance sheets onto the insurance carrier's balance sheets. Financial and professional lines insurance pays things like defense costs, settlements, judgments, various forms of liability exposure. Marsh, as a broker, helps clients obtain the necessary coverage. Based on your business model, we help you evaluate what coverages you need, how much coverage you need. We talk about policy wording, and we make sure you have what you need to protect your business. We work with public companies, private companies, nonprofits, companies of all different sizes. We've seen it all. But what I am so fortunate to have the opportunity to do, and the reason that I'm actually up here today, is I have learned that when you have a new asset class or a new type of technology, new exposures, you actually have to create an insurance market. So I'm not talking about new insurance carriers, because we have a whole bunch of traditional old school insurance carriers that we know pay claims and are very financially solvent. But we have to explain to those carriers and educate those carriers about blockchain technology and digital assets, what the real risk exposures are, and if there are any different risk exposures than from a more normal, more traditional company or form of currency or assets. So at Marsh, we formed our DART team. We love our acronyms. It stands for Digital Asset Risk Transfer Team. And those of us in this space, there's a team of about 15 of us in the US. We're focused on working with top clients in the digital asset space to help them obtain the coverage they need, but also to educate the insurance market so that we can create capacity for others in the space who will need it eventually. So now moving on to the fun stuff. Blockchain technology and digital assets. The top 10 reasons why insurance matters and why you need insurance. So reason number 10, to manage your employee exposure. So unfortunately, with all of blockchain's innovations and benefits, the technology has not solved the employment-related issues that are out there. So think sexual harassment, discrimination, retaliation. And this, of course, is relevant across all types of businesses, but for companies who are new and who are focusing on blockchain and digital assets, they likely have little investment made into their employment-related policies. They probably don't have a human resources department. They also probably have smaller balance sheets. Employment claims in general are really easy to file and to bring. Even though the costs of those suits are generally relatively small, they're so high in volume that the numbers add up very quickly. So for a new company, instead of carrying that risk on their balance sheet, why not transfer it to an insurance company's balance sheet? Reason number 9, key individuals need protection too. So here I'm thinking about kidnap and ransom insurance. So this is the most fun type of insurance to talk about, definitely the least fun type of insurance to rely on, because you never hope you're in this situation. But there is actually insurance for kidnap and ransom. So in this space, think about the fact that there's a select group of individuals who hold the private keys or who hold information that control access to digital assets. Plus, think about all the wealth that all these individuals have in the space right now. There is a very high probability that K&R coverage, or kidnap and ransom coverage, could come in handy one day. It's very affordable coverage. All of the coverages that I'm going to talk about are basically a year. K&R coverage you can actually buy for 3 years. And it provides exactly what it says, coverage for kidnap and ransom situations, but a ton of other things like threat response and corporate and personal security experts, things that smaller, newer companies may not already have access to. Reason number 8, it could be required by contract. So here I'm talking about what we refer to as miscellaneous professional liability coverage, or errors and omissions coverage, E&O coverage. So professional liability, or E&O coverage, basically provides coverage for claims arising out of the professional services you provide to your clients for a fee. So there are many contracts that you might have with outside vendors or partners probably require that you purchase E&O coverage. So think about this. If you provide advisory services to startups in this space, if the company you advise were to sue you because your advice was somehow deficient, you would want your own protection. You would want insurance to pay for that claim. You wouldn't want to have to carry that cost by yourself. Similarly, the startup may require that you have your own E&O coverage because if for whatever reason you refuse to pay the claim or you become insolvent, they want to know that there's insurance there as a backstop. Number 7, tech errors happen. Should a digital currency or smart contract not behave as promised, a technology or software developer could face significant liability. The number of these claims has increased in recent years as technology investments have accelerated. And Tech E&O helps transfer the exposure for these type of tech issues from your company's balance sheet to that of the insurance carriers. Number 6, could be required by law or regulation. So depending on the structure of your company, whether you're a trust company, a 40 Act fund, or a broker-dealer, there could be requirements that you obtain certain kinds of insurance. And here we're thinking about types of bonds, whether it's FI bonds or financial institution bonds, ERISA bonds, or surety bonds. Sometimes certain types of insurance may actually be required for your business. Reason number 5, insure against business interruption and other breach issues. Cyber insurance does a number of things, including covering first-party breach, business interruption costs, and breach notification costs. So if you hold PII or personally identifiable information for your customers and there's a breach, cyber insurance could help you. Number 4, protect your customers' assets, and it could also be a great marketing tool. Here we're talking about crime or fidelity coverage, so think theft of assets or hacks. Crime coverage can protect assets in cold, warm, or hot storage, assuming the insurance policy is structured correctly. There's a ton of press about certain companies working with digital assets that use the fact that they have crime coverage as a marketing tool. Please read the policies at issue very, very carefully. They really can protect a customer's assets, but the typical crime policy is actually structured to protect the company who buys the policy's own assets that they're holding. And so the customers tend not to be the lost beneficiaries or payees. So when you see those articles, please do your homework. Protect your personal assets and attract top talent along the way. D&O insurance protects the directors and officers of a company sued if they're sued or involved in some type of regulatory action. It's often referred to as the last line of defense and best form of personal asset protection. So if the company you work for is unable or refuses to indemnify you, and you happen to be sued or involved in some type of regulatory investigation, you don't want to have to start paying your own defense costs. So D&O insurance is there to protect yourself. Plus, it's a great way to attract talent along the way. With newer companies, many of you are focused more on the tech side, so you bring in outside support advisors who have more business experience. Experienced directors oftentimes require D&O insurance, so why not show them that you already have this in place? Protect your balance sheet. D&O insurance can also protect the company itself. If the company does something wrong, if they're sued, if the company is involved in a regulatory investigation. So D&O insurance really protects the individuals and the companies. And finally, the number one reason why insurance matters to the advancement of blockchain technology and digital assets is insurance is involved in every industry. Because it supports growth and innovation. It's involved in every industry out there. Amongst other things, it helps increase the brand behind an industry. There's a stringent underwriting process which makes regulators, banks, and investors comfortable knowing that if they're looking at a company that has insurance, someone else tested their procedures and they're comfortable with this company. Banks and outside investors will see you as a better investment if you have insurance, so you can get the capital to do the things you need to innovate and grow. And if there is a loss, you have the safety net to stay afloat and continue to grow where others lag behind. And I've actually seen many companies thrive because they have the support of insurance, and I've seen smaller companies fail because they don't have insurance in place. I'll just quickly touch on why insurance needs you. Insurance underwriters like data. Because this is a new space, new technology, and new assets, there's very little lost data out there. Newer companies have very little financial history, so the underwriters are uncomfortable in the space. And when uncomfortable, insurers act very conservatively. Either they don't provide coverage, they price it really high, or they limit the coverage. And this is where great partnerships come in handy. So we've worked very hard to educate the insurance markets. We've brought in outside law firms to help us through educational events with some of the top US markets and London markets. We've also been fortunate enough to have some amazing clients in this space. Some of you are in this audience who have either helped with our events or through their own underwriting meetings, their own attempt to obtain coverage for themselves. They've really devoted the time to teaching the insurers about their technology and the exposures that are associated with what they're doing. And also with some in the audience too, we already formed strategic partnerships, and we're in the process of forming a few more, to work with companies who can help bring data to the insurance market and just more comfort in understanding the technology behind blockchain. So partnerships and relationships go a long way in the insurance industry. Insurance really is vital to growing an industry and business. It helps companies grow. Traditional insurers like you think AIG, XL, Lloyd's of London, Zurich, for example, those big name insurers are very well funded and they know how to pay claims. What matters most when it comes to insurance is if they'll pay a claim. So there are a lot of new carriers out there who are advertising that they are focusing on the blockchain space. And maybe they are, and maybe they'll be great. But unfortunately, we don't have the history to show whether they'll pay claims, which is really what matters. We also don't know how well funded they are, so how many big claims they can actually pay out before they can't pay any more claims. So we work with the traditional insurers who meet certain financial requirements and will step up and who we know will pay claims. And we can all work together, whether it's with us, whether you work with other brokers or carriers directly, to help shape the underwriting process of those experienced insurance markets when it comes to blockchain and digital asset exposure. Believe it or not, the insurance carriers need you as much as you need them. So please take advantage of that, and we hope to talk to you all soon.